Hello, this is Quanru Invest. Today I'll be talking about why ASML will win. So ASML over here is a company that is trading down around 36% from all-time highs already. It is currently trading at $716 and it's been in this range for about 6 months or so already. So let's take a look at what ASML does. ASML over here, they sell these machines over here. They are about a few stories high. It's extremely big. It's almost like a truck. It's like 2-level store and it takes multiple different Boeing planes for you to ship this machine over here. So ASML's current valuation is at around a 35 times earnings, a 27 times forward earnings. So as you can see over here, 35 times, 27 times forward earnings. And for the price to free cash flow, it is currently trading at around a 28 times. So for ASML over here, their business model is spread into two different parts. So you have your net system sales, which is the portion where they sell all the different machines. And then you have your installed base management, where they will service the machines. I'll get into these two portions later on. So ASML in the semiconductor chain is under your wafer fab equipment section. So what they do is they basically do your lithography, they do the patterning for all your chips. So in order for your chips to be high quality, meaning in order for your chips to do advanced things like 5G, quantum and all that, they need to be patented in a very specific way. And ASML does that for all your different chips and semiconductor. So the ASML machines that they sell are typically split into two different parts. You have your DUV machines, which are for your everyday users, and then you have your EUV machines, which is for all your different AI revolution and AI basically advancements now. So you have your 5G, FSD, your quantum computing, which requires some sort of EUV machines and all the patterning as well as your AI data center. So we see companies like Amazon, Meta, Google, Microsoft pursuing all these AI data centers. They need the chips, and the chips can only be patented using your high-NA EUV machines, which are sold by ASML over here. So as for your DUV market, they hold about 80% of the market share. So you have other competitors, which I'll be talking about later on as well, but they hold around 80% of the market share in the DUV market. As for the EUV market, they hold around 100% market share. Yeah, it's a monopoly in that segment. So let's talk about the competitors for ASML. So under the DUV segments, they have two main competitors. You have your Canon as well as Nikon. They make DUV machines. So in the DUV machine segment, there are also two different parts. You have your ARF as well as your KRF. So ARF is better than KRF. It's a shorter wavelength, and for Canon and Nikon, they're more focused on the KRF segment. So they're not so focused on the ARF segment, and that's why ASML is able to hold around an 80% market share in your DUV market. As for the EUV market, which is the lithography machines required to produce the high cutting edge chips for your AI data centers, your FSD, as well as all your different other advancements, ASML has no competitors. So currently there is no competitor to ASML. It is a complete monopoly in this space, and that's what I like about this company. So as for the customers for ASML, they mainly sell to three main customers. So there's some sort of customer concentration risk over there. So they sell about 50%, 55% of their total machines to TSMC, this other company that is doing quite well as well. And then you have Intel, which is around 10 to 15%, and Samsung, which is around 20%. And then you have other small companies like SMIC, SK Hynix, Global Foundries, and Micron as well, which buy some EUV machines for their logic chips. And for ASML over here, a potential risk could be that they have too much concentration. So, like for example, 2 quarters ago, there was Intel. Intel had some problems with Intel actually delayed the starting up of the new fab, and that actually hurt ASML's earnings because in their guidance, they basically in their earnings, they always put out their net bookings and all that. And the net bookings was actually half of what was expected because of this Intel incident over here. So Intel basically what they did was they just stopped, as in they postponed their fab, and then as a result, the net bookings for ASML actually dropped in that quarter. So a possible argument for ASML, a possible bear thesis is that ASML has too much concentration risk in their customers. If these customers over here, they don't do well, then ASML won't do very well as well, because ASML gets most of the money from these three customers over here, your Intel, your Samsung, and then your TSMC, basically your three foundries. Next portion over here. So there are some alternatives to ASML's EUV machine. So you have stacking. Stacking means you put all the different semiconductor into like a layer over here, and then to increase the density and all that. But this stacking alternative method, it is more expensive. It is it's lower yield and it creates more heat, and more heat typically leads to more cost as well, which is similar to the point that we made earlier. And then the yield of the semiconductor is actually a lot lower than your actual EUV machines. So for a lot of those companies, it is not economically viable for them to use this stacking method. It's only those Chinese companies that they cannot produce. It's only for Chinese companies because they can't buy the EUV machines. There's some sort of a chip act in the US where they prohibit the Chinese companies from getting the EUV machines from ASML. And then the other alternative is possibly your Chinese government. Chinese government basically pushing for more EUV advancements, and then yeah, but I think that one will take a bit longer. It's a bit hard to justify how long it will take for your Chinese competitors to catch up to EUV, but analysts have said that it is 10 plus years. So hopefully that's true, and ASML is able to continue with this lead. But maybe a 5 plus years will be a good estimate for the EUV machines over here. So for the installed base management portion of the business, I think this business is actually incredible. Why? Because your EUV machines, your ASML machines, your DUV EUV machines, they are sold to a customer and then they last for up to 30 years. So last up to 30 years in normal functionality, and then after 30 years they can still be reused for other purposes as well. And during the duration of the 30 years, the machines, they need ASML people to be there on site to solve any problems whenever possible and to do maintenance checks, to do services and all that. And that is where ASML comes in, because it's sort of like a recurring revenue business model where they can continually just have the people over there making revenue, because it's ASML's machine, so they need the ASML personnel to be there. And it takes about 3 to 4 years to learn everything that's required for you to service these machines. And your machines, they last up to 30 years, and after 30 years, they can be reused. So it's sort of like a lifetime thing where you have to keep employing ASML people to be there on site to basically service the machines. Next one, let's look at the growth profile of ASML. So ASML over the past 10 years, the revenue has grown at around 17% CAGR over the past 10 years, 20% net income over the past 10 years. And although there are cycles, so there are clear cycles over here where there are up and down trends, the clear secular growth trend is there. Basically, it's just up, because as the company, as the entire world globalize, as people become more dependent on technology, there will be more need for your chips. And when there's more need for your chips, there will be more need for ASML's machines as well. So I see this as more of a secular growth trend where we continually increase the demand for your chips, and hence your EUV and your DUV machines. Next one, pricing power. So ASML has incredible pricing power, because they're the only company in the entire world that's able to produce your EUV machines. And so if let's say TSMC doesn't buy your EUV machines, they won't be able to produce the high cutting edge chips that is required for all your data centers, that Apple needs, that Nvidia needs, that Amazon needs, and so on. So for ASML over here, they have incredible pricing power, and as you can see over here, they have increased their prices from around 100 million per machine in the EUV machine market to around $350 million per machine. So that's around a 17 to 18% CAGR over the past 7 to 8 years or so. That's incredible pricing power. Just imagine if the volume holds stable and they're able to increase the prices at around a 17%. That is just without even volume increases, they can already increase their revenue by about 17%. So it's incredible. Next one. So some possible headwinds for ASML include your China innovation. So no one knows what exactly China is doing. China will always keep it a secret to basically not release any information about the EUV advancements. There are possible EUV alternative advancements and so on, and they will only do it whenever it's a perfect time. So I actually spoke to someone that had some sort of like exposure to SMIC back in the day. He worked with SMIC before, and what he told me was quite striking as well, because he said SMIC was once a company that was much smaller than another company called Global Foundries, and now they have now SMIC has technology that is much better and much more superior as compared to Global Foundries. So it clearly shows that the Chinese innovation is definitely there. They are the best at copying things, and that is one of the possible headwinds that you have for your Chinese basically from Chinese innovation. But there's a counter argument to it as well, because all your different fabs, right, your Intel, Samsung, your TSMC, they already have their fabs that are built for ASML machines. And so for them to switch over to your Chinese machines, it could take a lot more cost, and it's not actually very economically viable for them to do it. So there's an alternative argument to it as well. Next one, another possible tailwind is the weakening semiconductor industry. So the semiconductor industry has actually been on a downtrend for the past few years already, and now we're recovering. We're projected to recover around 12% next year, which is what we'll see over here. So possible tailwind. The semiconductor trend is sort of like turning upwards. So it's going back upwards now, and it's projected to be about 12% this year. And so ASML itself, it's a company that is extremely cyclical. It is riding the semiconductor trend. So when the industry as a whole goes down, then ASML's revenue will go down because the companies will try and cut costs, and the cutting of costs will come from the EUV machines. Next possible tailwind for ASML is your AI revolution. So whenever you have all your different hyperscalers, you have your Amazon, your Google, your Microsoft, Oracle, and all that, they want to produce your AI data centers. They need high cutting edge chips, and those high cutting edge chips can only be produced with the help of ASML machines. And so if you want to bet on AI, the most predictable way for you to do it is to bet on it via either ASML or TSMC, because Nvidia's chips, I don't know how sustainable they are. I don't know the economic mode for it, because you have other companies like your Amazon, your Google, Microsoft already trying to design their own chips, and then you have alternatives like your AMD as well, which are making their own chips as well. So I'm not too sure what Nvidia's mode is. So if you want to bet on the semiconductor industry, the best bets are ASML and TSMC. But for TSMC, there's a geopolitical risk. That's why I chose ASML instead. So based on their forecast over here, this is what they're forecasting. They're forecasting around 44 to 60 billion in total sales in 2030, and they're forecasting around I believe 33 to 47 net system sales, 11 to 13 billion in their installed base management. So based on the forecast over here, I actually did sort of like valuation for ASML. This is the valuation for 2025. So based on the 2025 guidance, the fair value for ASML, the base case, is at around $753 if it holds a 30 PE. So currently now it's trading at around a 35 times earnings. I expect some form of multiple contraction. And for 2025, it is currently still slightly undervalued based on this base case over here. Of course, for the bull case, it could go up to $1,000, and the bear case will be around $550. So another one that I did was for the 2030 guidance. So 2030 guidance is over here. So based on their guidance and their estimates, 44 to 60 billion was their guidance. I had a low, mid, and end high end estimate over here. And based on the low end, it's at around $516 in terms of their intrinsic value. Mid end will be around $770, and the high end will be around $1,100. So as you can see over here, the downside and the upside is much more as compared to the downside. And so I think ASML now is presenting a decent risk to reward right there. It's a high quality business. It is the only company that is sort of like monopolistic in this whole semiconductor wafer equipment trend over here. And so I think for ASML is quite a decent bet if you want to bet on the AI revolution. That even if China, they basically create their EUV machine, I don't see it as an immediate threat to ASML yet, because all your foundries, they build the machines they build the fab based on ASML machines, and for them to transition away from ASML machines, it is not economically viable at all. And so ASML over here, I think it is presenting a decent buying opportunity. Of course, do your due diligence and look into the company first. But for me, I bought a large stake in it already. So I'm looking to add. My next add will be at around possibly $650 or so. And then 540. And then the last add will be at around $330, which is the worst case for ASML. Hopefully it gets there one day. And yeah, that's all. Thank you so much for watching.